Pine Labs is in talks to acquire Setu, an API infrastructure startup. Bengaluru, IPO-bound digital payment and financial services provider. Pine Labs is in talks to acquire API-based infrastructure company Setu in a cash and equity deal for $70 to $100 million. Three persons aware of the discussion confirmed to ET. If the acquisition comes through, Pine Labs will get access to Setu's account aggregator consent framework and technology, helping it improves market time for its planned financial services launch, according to one of the persons cited above. Setu's technology stack eliminates the need for financial service providers to make multiple integrations for one feature. The deal comes at a time when Pine Labs is looking to diversify its offerings from just merchant payment. Last year, the merchant-focused fintech took its first steps towards consumer offerings with the acquisition of Singapore-based loyalty payment startup Fave. It also launched a payment gateway, Plural, to help new-age direct-to-consumer brands accept digital and credit-linked payments. The due diligence is underway, and Setu's board has also been apprised of the offer from Pine Lab. Currently, they have the exclusivity window for about a month, a person briefed on the matter said. Last year, the company was looking to consolidate its acquisitions of gift card provider Quicksilver and Fave on its consumer platform to offer loyalty-based and buy now pay later solutions. Discover the stories of your interest: blockchain 5 stories, cyber safety 7 stories, fintech 9 stories. Ecom 9 stories, Mill 8 stories, EdTech 6 stories. Setu's technology stack is expected to help Pine Labs overhaul and refine its financial data infrastructure at a time when it is actively eyeing India's digital lending space. Mint was first to report on the development on Wednesday evening. Founded in 2018, Setu provides API infrastructure, which allows banks and other financial institutions to launch financial services on its platform. It also allows companies to break through old modes of loan assessment, such as SMS readings, screen scrapings, and file uploads, and allows service providers to seamlessly collect data through consumer consent. Setu partners with licensed account aggregators and provides customizable screens for users to register, approve, reject, and manage data consent requests. Setu also owns its own sandbox, which allows developers to build their own solutions on top of the technology stack. The few large acquisitions by Pine Labs have only been around diversifying into new markets and launching new segments. However, with regulatory changes like tokenization, the account aggregator framework, and the personal data protection bill, it is being forced to think of the technology stack and the consent layer, which may be hard to build later, said a person who was aware of the discussion. Setu co-founder Nikhil Kumar declined to comment on the discussion. To date, Setu has raised a little over $18 million in equity funding. Its competitor M2P Fintech recently announced its $56 million raise, which was led by New York-based private equity firm Insight Partners. In January, ET had reported, citing sources, that Pine Labs had filed for a confidential initial public offering worth $500 million with the U.S. Securities and Exchange Commission, and was seeking a valuation between $6 billion to $7 billion. The same month, the company also raised $20 million from India's largest lender, State Bank of India. ET had also reported last month that Falcon Edge was in talks to invest at least $100 million in Pine Labs.